people are pulling away from the entire crypto industry because of the massive drama that is happening right now within it. The entire cryptocurrency market is feeling the effects of this, not just the Shiba Inu community. Who or what is causing this uproar, though, we will discover. Important notice: in the midst of the unprecedented excitement surrounding the first ever authorization of Bitcoin exchange-traded funds, an exciting development has just surfaced. I suppose it goes without saying at this point why this data is vital for anyone owning a Shiba Inu. Such reports have an immediate effect on market dynamics, drawing in investors and molding the storyline surrounding the acceptability of cryptocurrencies and conventional finance. Continuing the trend of big asset management organizations exploring the cryptocurrency market, the fact that BlackRock cannot legally buy the cryptocurrency makes this finding all the more interesting. The entities that will be responsible for this duty have now been revealed by BlackRock. This new information reveals how conventional banks and other financial institutions are using creative tactics to deal with a complex world of digital assets in a way that satisfies the current regulatory requirements. In light of these legislative limitations, BlackRock has announced the formation of a third party to acquire Bitcoin on its behalf so that it can continue to investigate the cryptocurrency's potential benefits. A third party, such as a cryptocurrency custodian or a specialist service provider, with the appropriate licenses and authorizations to handle digital assets, is likely to be involved. BlackRock has partnered with companies like JPMorgan. Now things start to get intriguing. The CEO of JPMorgan, Jamie Dimon, recently told our lawmakers that he would ban cryptocurrencies if he were in charge. We all remember that statement Dimon made. The comment, "If I were the government, I'd close it down," to emphasize his point of view on the subject. Do you know what this means? Then you should join him on his bandwagon. Why does this seem to contradict itself? The phenomenon wherein corporations or individuals may first show doubt regarding a particular asset or technology before ultimately opting to engage in it gives birth to this question. Changes in viewpoint, shifts in market dynamics, or a better grasp of the subject's possible advantages and disadvantages could all contribute to this change. It is worth noting that JPMorgan executive Jamie Dimon first criticized cryptocurrency. Thoughts and feelings toward cryptocurrencies might change over time due to a number of circumstances, so it's important to keep that in mind. The eventual saturation of the business, heightened institutional interest, or strategic realization of the value that could affect Dimon's future involvement in the crypto area. The ever-changing character of financial markets and technology is frequently mirrored in the ever-changing character of financial thought and activity. As they maneuver through the ever-shifting financial landscape, it is usual for both individuals and organizations to reevaluate their stances. But this isn't the story of JPMorgan. JPMorgan is now being criticized by crypto fans. As an example, this tweet claims that JPMorgan CEO Jamie Dimon is a parasite and that the company facilitates illicit acts including money laundering and more. In addition, the tweet claims that the institution faces few repercussions, such as a modest fee and a slap on the wrist, for participating in such action. Just so you know, JPMorgan has been under the microscope from regulators and courts for a long time, just like all the other big banks. Probes and fines have been levied against the bank due to regulatory infractions, compliance failures, and ethical issues. A common criticism leveled against these institutions is that the fines levied against them may appear insignificant in relation to the seriousness of the offenses. Settlements reached between JPMorgan and regulatory bodies in response to claims of wrongdoing are one possible example of a legal action or controversy involving the bank. Possible examples include market manipulation and misleading activities, as well as problems with anti-money laundering regulations. This tweet and similar social media posts may reflect the views of people who are critical of major banks, but readers should investigate the claims further by looking into the details of any related lawsuits or regulatory actions, as well as the bigger picture. Claims made against persons and entities in the financial sector can be better evaluated with a thorough grasp of these scenarios. However, it is irrelevant whether Jamie Dimon's position on cryptocurrencies is an honest change of heart or seen as an opportunity for him to cash in. The dynamics surrounding it have caused widespread panic and confusion, especially in light of the forthcoming Bitcoin exchange-traded fund certification. As the leader of one of the biggest financial organizations, Dimon has a lot of influence over how the public views cryptocurrencies, so the cryptocurrency community typically keeps a careful eye on him and other powerful people. Some saw the lack of clarity about his position as an attempt at manipulation or threat, which added to the market's unease. Some have speculated that the approval of a crypto would be seen as a sell the event, given the ongoing debate surrounding Jamie Dimon's apparent stance change on cryptocurrencies and the resulting market instability. When investors have already priced in the predicted outcome of a favorable development, the sell the news phenomenon happens in financial markets. Consequently, investors may sell off their positions in anticipation of a profit-taking or market downturn following the official announcement of the news. Some have begun to wonder if the expected acceptance of a crypto F will follow similar pattern of market response, given the turmoil surrounding Dimon's pronouncements has added an air of mistrust. The sell the news craze may have a very negative impact on Shiba Inu owners, when a favorable event like the acceptance of a crypto F is widely expected to cause a jump in the value of all cryptocurrencies, including Shiba Inu. Some investors may liquidate their holdings in anticipation of profit-taking when the event really occurs. In the near term, the entire cryptocurrency market may feel the effects of this possible sell-off. In addition, the sell the news dynamics' negative emotion and disappointment may overwhelm crypto space's favorable fundamentals. Market volatility could rise, and investors' confidence could be momentarily rattled. Also, some investors may temporarily pull their money out of the market until there's more clarity on the market's trajectory if they see the acceptance of a crypto F as the pinnacle of favorable developments. This has the ability to temporarily alter the dynamics of the cryptocurrency market's price movements, which could impede its capacity for long-term growth. And this is something that you need to grasp. One recurring pattern in Bitcoin's history is sell the news, which has happened more than once. An extreme example of this happened in 2017 when the price of Bitcoin skyrocketed above $20,000 just after the futures on the cryptocurrency were published on the Chicago Mercantile Exchange. Futures trading's debut was seen as a watershed moment on the road to widespread acceptance, together with the succeeding top, which demonstrated the market's enthusiastic reaction. When Coinbase's initial public offering IPO was a smashing success in 2021, and Bitcoin hit a record high of $65,000, another sell the nukes incident occurred. The whole Bitcoin sector looked to Coinbase, one of the top exchanges, as a watershed event when it went public. But Bitcoin's value retraced in the months that followed, suggesting a possible market correction and a period of profit-taking.